please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Now back home on the Lord Street, it was a record-breaking day. The Nifty and the Sensex, both of them posted the biggest one-day gain in 3 months. They scaled new peaks. In fact, the Nifty touched the 11,700 mark but ended just shy of that level. The Sensex as well rallied 450 points with the index hitting 38,700 mark for the first time ever. It was not just the frontliners. We had the mid-cap index as well that rallied in line with benchmarks, and they closed with gains of more than 1%. Banking stocks, they outperformed, ending the day with a good 400 points odd. Anisha, things looking positive. We had institutions that were buying, as well as global cues. Quite good. Tell us how straight set up.
Oh, well, yes, as you mentioned, it's the global cues that are really driving the markets higher. So yesterday we saw that strong rally with the Nifty touching 11,700 mark. In fact, it was the biggest one-day gain that we had seen on Sensex and Nifty in 3 months. And the support actually came from the banking space. So stocks like ICICI Bank, SBI, Kotak Mahindra Bank, they were all rallying. And Reliance is the other heavyweight that's really continuing to support the markets because it was the 6th straight session yesterday that one participated. Now, where's the buying coming in from? As you mentioned, it is the institutional flows that continue to remain positive. Now, we have a solid 4-digit buy figure coming from DIIs yesterday. Now, they bought around 1,117 crore rupees in the cash markets and equities yesterday. And the FIIs also pumped in around 252 crores. Now, talking about the global cues then, well, the stateside, if we see, they are touching record highs day after day because the S&P and NASDAQ actually hit record high yesterday. The NASDAQ touched the 8,000 mark for the first time, and that was because there is a new deal that is being announced in US, and that is the trade deal between US as well as Mexico. So they're calling it the United States-Mexico Trade Agreement, and it will be valid for 16 years if the Congress approves this. We know how much the volatility there has been around trade, so this comes as a positive, and that's the reason the US markets partially propelled yesterday. And it was all kind of stocks that were moving higher, so not just export-facing stocks like Caterpillar or Boeing. It was the auto stocks that were rallying. It was the banking stocks like Goldman Sachs, Morgan Stanley, etc. that was rising higher. And add to that the tech stocks like Netflix, Facebook, they were all rallying. So it was a broad-based move that we saw in the US markets yesterday. If you look at the European markets as well, there were positive cues there as well. The German DAX being the key outperformer there, which gained over 1% in trade yesterday. As far as Asia today is concerned, well, it is a sea of green across Asia. Nifty, SGX Nifty for starters is suggesting a start at that 11,750 mark. Other than that, we had seen strong close in Nikkei, Hang Seng yesterday. The cues are positive there as well. In terms of things to watch out for today for our own markets, just keep an eye out on rupee. That one closed above the level of 70. We are seeing the dollar moving below the 95 level mark. So something to watch out for. Crude, a tad bit of niggling worry there because it is trading above the $67 per barrel mark. There's a Supreme Court hearing regarding the applicability of Feb 12 circular. It is just a hearing, no judgment is expected, but just might keep the sentiments a bit volatile. Watch out for Nifty Bank because it is just 50 points away from record high, and it is expiry week, so maybe a lot of volatility. And as you mentioned, an important thing to watch out for is how shorts behave today.
Absolutely, whether or not they can hold on to those positions, or in fact they could cut some of their shorts as well. But tell us, what are the stocks we can focus on, Anisha?
Well, Jet actually came out with numbers late last night and they look disappointing. The company's losses have expanded to 1,300 crores versus a profit of around 50 crore that they reported last year. Remember, we were working with an estimate of 400 crore loss, so this is much worse than what we were expecting. Yes, the company talks about cost-cutting measures and raising revenue through monetization. They're looking to raise funds as well. But for today, maybe the stock will see a bit of downtick. Do remember there's a con call at 4 p.m. so we'll watch out for more commentary on that. Moving on to GAIL, because there the company says that they're looking to restart the Dabhol LNG terminal. And also there are some comments from Oil Minister saying that there is no plan to split the company, as well as that GAIL should exit the petchem business. So let's see how that one reacts to that. A positive news for Colgate-Palmolive because they have appointed Mukul Deora as the chairman. I understand that he was at the helm earlier as well, so he returns back, and that should be a positive news given the fact that the company has been losing market share quarter after quarter. Fertilizer companies will be in focus today because an exclusive from a sister channel suggests that the subsidies now could be paid on a weekly basis rather than the 8-month wait that they have to see right now. So that should be a key positive. Oriental Bank of Commerce will be in focus because they are planning to raise some capital via QIP of around 1,000 crores. So that should be something on the radar. JBF Industries, well, there is a bit of restructuring there, wherein KKR Jupiter has agreed to buy out 100% stake in one of their subsidiaries, and as a result, around 450 crores will flow from JBF Petrochemicals to JBF Industries, and a lot of debt restructuring there as well, so need to look at details on that. Punch Oil, lastly, it was very volatile yesterday. There was news regarding some settlement, etc. But yesterday we understand that Jyoti Punj and Shiv Punj, two of the company's directors, have actually resigned. So maybe you'll see that one in focus as well.
Okay, all right. Thanks so much for that, Anisha. Well, time to slip into a short break. Up next, the Allahabad High Court refuses interim relief. Well, the 180-day deadline imposed by the Reserve Bank of India on the 12th of February for resolving stressed assets over 2,000 crore rupees has ended. The RBI circular has also got the judicial backing after the Allahabad High Court refused any interim relief for stressed power assets, which now face insolvency proceedings. Well, we also understand that, in fact, the government may consult the Reserve Bank of India under Section 7 of the RBI Act as per Allahabad High Court's directions. Remember, under Section 7 of the RBI Act, the centre can give directions to the RBI in public interest. Sapna Das joins in with more details on the same. Sapna?
Well, clearly the government is indicating two options as of now on the table. One, of course, is that consultation with Reserve Bank of India can be an option as per the direction of the Allahabad High Court. Now, probably this consultation will happen under Section 7 of the RBI Act. That's what the government is signaling. If you look at the RBI Act, Section 7, it very clearly states that the central government has the power to issue directions to banks, under a certain set of circumstances. But the Reserve Bank of India will have to be on board as and how these decisions are taken, or even at the implementation stage. There's an entire mechanism that is there under Section 7 of RBI Act. So any type of consultation or anything further to that will have to transpire under this section. Now, having said that, a lot of people are asking this question that whether the government will actually go ahead and issue directions and kind of overrule RBI if so required. Well, this is something the government is not in a position to speak about as of now, and that has never been the practice so far. So a bit of a question mark actually whether they will really overrule, though technically the government has the power to overrule. That's one. Second, of course, and I think the more immediate thing, 15 more days are remaining for the banks to do some kind of resolution before all of these 7-8 projects are marched into NCLT. So something may transpire under that. Of course, if none of these options work, then the only way out is that actually sending these projects to NCLT. That's how the position looks like as of now. We just have to keep a watch and see how this really progresses.
Well, we spoke to a host of experts on what they make of the Allahabad High Court order and its impact on the banks. Let's listen in to what they had to tell us.
The Section 7 of RBI Act, which is being referred to, probably Section 7, it contains the power of central government to give directive to RBI. I think so. I may be wrong. That being the case, and just for as far as I know, this particular section has never been invoked by the central government in giving direction to RBI. If Section 7 is that, and if that is what his judgment is alluding to, then does it mean that central government has to give a direction to RBI, and then all other things are falling in place, that there is a committee, there is a consultation? In any case, I think HPC is already in place, consultations have already taken place, and as very rightly said, it's a much larger issue which would need to be resolved by many part of the system to move. So I think all that being put together, from whatever I see, nothing has changed as of today.
We should look at this issue in a more pragmatic manner. The reason is that this sector has been affected by a host of issues, lack of PPA, lack of FSA, then supply of coal to power plants, and also those power plants which were wanting to sell through the exchange, not enough takers, discoms, because they were not able to raise the tariffs in time. So a host of difficulties had bedeviled this particular sector in real terms. So there was a case for people going to the court and asking that there must be a separate dispensation for this sector alone because of the conditions which are totally extraneous to their own, industry, functioning. I only hope that there is a balance in what decision is being taken with RBI and government to ensure that the losses to this sector, some of the projects which are looking at the NCLT, what they are looking at? They look at 35 lakhs per megawatt as against 5 crores per megawatt, the capital, involved in those projects. It will be a great economic loss to the banking system.
There's a window available for banks to press the button if they want to initiate proceedings. Now, if that happens, then some assets for which there are ready buyers will go through the process, and there'll be a massive haircut, which of course the public sector banks will have to take. While we respect the judgment of the Allahabad High Court, and we are sure they've gone through all the facts, the fact of the matter remains that this is not a matter which the judiciary or the Reserve Bank or the banks need to look at. In fact, it is the High Court Committee which needs to take a call on this, because it's a sectoral systemic problem.
Well, so how significant is this Allahabad High Court order when it comes to the resolution process going forward? And what is the impact of this Section 7? Lata joins us now. Lata, how will the High Court order impact the RBI and banks' battle against bad loans?
Well, my sense is the banks are not going to be very badly affected, because most of them were already declared NPAs, and about 65% has been provided for. If you would have noticed in the last 2 quarters, provisioning by banks has sharply gone up from like 50% to 65%. So that's for all assets put together. So for most of these assets, they would have largely provided. Any incremental bad news on banks, if at all, will be very minor. The problem will be in terms of listed stocks for those of the companies which are impacted and which are in that list, all the GMRs, the GVKs, Lancos, Punj Lloyd, and of course, there's Winsome Diamond and Geetanjali Gems and all, which are anyway, they're not worth the paper on which it's written. Those stocks will anyway fall. So companies which are coming in that list are definitely going to find further falls today, if that is at all possible. The judgment says, 1, there is no interim relief granted. 2, the central government can start the consultative process under Section 7 of the RBI Act. Under Section 7 of the RBI Act, the central government can give directives to RBI in consultation with the governor. It's a clause that has never been used. No government gives directives to the central bank. In the world of central bank and financial sector, that will be seen as breaking down of all institutions. That's what happened in Turkey, actually. The government gave directives to the central bank. So India will never go down that path, you can be very sure. There will be consultation between the Power Ministry or between the government and RBI, and that high-powered committee of the Cabinet Secretary will also consult with the Reserve Bank. They've given 2 deadlines, in 15 days for the consultation with RBI and in 2 months for the Cabinet Secretary's report. But these are reports. They have to be implemented by state governments. The DISCOMs have to stop AT&C losses. These are long-term things. To my mind, from starting tomorrow, maybe after 15 days, the banks will start taking all these companies to the NCLT. Those 5 or 7 which State Bank is trying to resolve may get resolved. But the rest of them are definitely ending in the NCLT. What Mr. Gopalan said was right. Probably about 1.2 lakh crores of assets will go for liquidation value, which means 10%. Whatever the land is used for, whatever you get in terms of steel scrap, that's about all banks will be able to retrieve. It's painful, but at the moment that is provided for in the bank books.
Okay, all right, Lata. Thanks so much for that. Well, Finance Minister Arun Jaitley addressed the annual general meeting of the Indian Banks Association. Jaitley underlined that bad loans remains a major challenge for the banking sector as well as the economy on the whole, but he also asserted that India's macroeconomic fundamentals remain strong.
Commercial decisions cannot be imputed as a corruption crime. And this has certainly empowered bankers to take honest decisions. And therefore, this has also empowered all of you outside the IBC process to take honest decisions which you think are in the interest of your banking system based on commercial prudence, which are going to resolve the challenges before the banks itself. You are the best judges.